Now, the waiting game is over. After 9 months of waiting, not a baby, but two new IPOs for the Shanghai market. The first mainland Chinese stocks to debut in more than 9 months have just started trading. They'll test new rules aimed at curbing excessive first-day gains. Paul Gordon on top of all of that. Paul, how are they doing?
As Linda, let's take a look right away. Only a couple of minutes of trading so far, and we have Guilin Sanjin Pharmaceutical up 76%. The company, China's biggest maker of herbal lozenges, Zhejiang Wanma Cable, has doubled on its trading debut in the first couple of minutes. That company makes cables for China's biggest power producer. Both companies listed in Shenzhen, the smaller of mainland China's two stock exchanges. They raised a little over $200 million combined. If the government wanted to curb first-day gains, well, it doesn't appear to have succeeded so far. The online portion of each IPO shows how popular these stocks were. Wanma, 750 times oversubscribed. Sanjin Pharma's offer almost 600 times oversubscribed. And today, supermarket chain Umart said its IPO, or Yomart, I guess, was almost 400 times oversubscribed. Wanma and Yomart also raising far more than they had planned. So plenty of interest, plenty of profit for some shareholders on day one has.
Hey, why the need to curb gains on the first day? Why does the government need to come in and intervene?
Well, until last year, regulators often limited a company's valuation at the initial public offering, typically setting it at about 20 times earnings, regardless of the type of company. Now, because of high demand, that often led to very big first-day gains. There were 76 new listings in Shanghai and Shenzhen last year. First-day decliners, not a single one. Everything rose on its first day, and the average first-day gain was 152%. A less popular statistic, though, 93% of IPO stocks ended the year below their first day close. In other words, if you bought on day one and held on, you almost certainly lost money. The government didn't like that setup, so IPOs were suspended last September. It could see this coming while new rules were worked out. This May, regulators said they'll let underwriters set IPOs closer to secondary market prices. In other words, greater market determination. Sanjin Pharma's IPO values that company at about 33 times last year's earning. Wanma valued at roughly the same as rival Nanying Cable at 31 times, and also China's CSI 300 index, their current P of 31. So everything bang in line, but as I say, it did not stop those first-day gains. Guilin Sanjin up 73, Zhejiang up 107%. Back to you.
The man on top of all the numbers, Paul Gordon. Stick around. Let's bring in our guest this morning. He's Fraser Wright, Managing Director at CLSA Asia Pac Markets. He's also co-author of the book Privatizing China, the Stock Markets and Their Role in Corporate Reform. Why did they even bother with those measures when they know, obviously, first day of trading, there's no stopping the gains?
Yeah, basically nothing's changed. And their measures came out and they were clearly trying to do something. But the problem is that IPOs will not be successful unless you get these gains. There's huge oversubscription rates because everyone wants a deal that's going to go up 100%. I think until the companies themselves go back to the underwriter and say, what have you done? Because what's missing from Paul's numbers is, if you look at the volumes that trade today, generally about half of the shares that were issued at IPO have been sold. And they've probably already been sold. There's a huge volume that goes through in the open. And so basically the company should be going back and saying, hold on, you've just sold me far too cheaply.
So what? This is not as significant as people make it out to be, correct? I mean, if you take a look as well at how big these IPOs are, they're not very big.
Oh, they're very small, and that's what people forget. Obviously, everyone knows the PetroChinas and the Sinopecs and these mega listings. That's what gets the attention. But the bulk of IPOs in China are actually very small companies, and generally listed in Shenzhen and the small and medium-sized enterprise board, raising $20, $30, $40, $50 million.
Fraser, just going back to your point about half the shares being flipped on their first day, that's great for the people who got in at the IPO. But if last year is any guide, we're going to see a fallback in a lot of these prices, and a lot of those small retail investors who only got in at the second bite at the cherry, they're going to lose money, and that's a big area of concern, isn't it?
I think it is an area of concern, although the number of investors, again, if you look at how many people buy in the first day, it's not necessarily that many. But you've got to remember as well that last year we were in a falling market. And of course, you know, the market last year was down, what was it, 50, 60% at the end of the year. Whereas this year we're up something like 50, 60%, and there's still a lot of liquidity there. And so you could well see they're high today. By the end of the year, they may be down. But nobody's holding it for a long term in China. They're looking for short-term trading. So you could see some rallies in the short term.
And does that mean, then, you think that these pace of first-day gains and the ability of companies to come to market is going to continue for the rest of the year?
It certainly will continue for the short term. Certainly these small companies are not raising that much money, so the liquidity isn't a problem. It's not as if you're bringing PetroChina to the market and trying to raise $10 billion or something that's really going to sap the market. You're going to see a lot of interest. And, you know, seeing gains like this, I'm somewhat surprised how high they are. And I'm sure, you know, the next time they come around, people are going to be investing.
The big ones, the big IPOs, when will they come to market?
They'll come eventually. But
When's eventually?
Oh, within sort of a few months. You'll certainly see probably over the summer or certainly in the third quarter some big IPOs, billion-dollar IPOs. I think what the government wants to do is test the water, see what the reaction's like. It's certainly been very positive so far. Huge amounts of money, lots of liquidity in the market, you know, very high volume, trading volumes out there. And so they'll be able to get them done, but they don't want to start with that and fail. They want to start smoothly, get the excitement going again, and then bring the big deals.
Are there particular sectors that will produce these huge IPOs? Commodities?
Possibly commodities, railway sector. You know, there's always power. China's got lots of unlisted SOEs which they can always cobble together to basically bring to market again.
I like that term, cobble together.
Well, that's what they are, because they're not natural companies. They're basically parts of the state production unit that they sort of ring-fence legally and say, hey, here's a listed company. But they're not necessarily commercial companies as we'd understand them in the West or in developed markets.
Okay, Fraser Howie will be back with him very shortly. For now, though, not all Chinese IPOs are racing ahead today. Here's one that's being dumped in Malaysia. Singquan International Sports Holding is a Chinese sports shoemaker. It debuted in KL this morning. The stock currently down by about 11% in the first 38 minutes of trading. Now let's take a look at the markets opened in this part of the world. Japan and South Korea looking like this. The Nikkei 225 up by 0.1%. The Kospi down by 0.6%. Further south, the ASX 200 index in the green, in the money, up by 0.2%. Taiwan, Singapore, and Malaysia looking like this. The STI down by 0.1%. And we have the KLCI up by 0.2%. Trading just underway in Shanghai and the Philippines. Pretty much a different story for both indexes there. You can see it on your screen. Now, let's get a check on China's biggest companies by market value. PetroChina, ICBC, China Construction Bank, and Bank of China. Mixed picture there. PetroChina, ICBC in negative territory, but gains for Construction Bank up by 0.6%. And Bank of China currently down by 0.2%. We're off for another short break. More with Fraser Howie and China's IPO market. When we return the trade, we're back in 2. Don't go anywhere. Now, we're talking China's IPO this morning as they relaunch in the past few minutes. Let's get back to our guest, Fraser Howie, Managing Director at CLSA Asia Pac Markets. He's also co-author of the book, Privatizing China, the Stock Markets and Their Role in Corporate Reforms. Now, just before that, we want to take a look at Guilin Sanjin Pharmaceutical and how that stock is doing at this point in time, surging by about 76.7%. We'll call it 77%. The company is China's biggest maker of herbal lozenges, something I probably need right now. Zhejiang Wanma Cable, surging by about 134%. No surprise, though, right? Fraser, that they have surged this morning. But you say that they're likely to end the day at these levels as well.
Well, often the traditional pattern is the jump haul happens in the first few minutes and then it pretty much goes flat. But what's interesting in China, because there's no day trading, the only shares that can be sold today were allocated at the IPO. And since already half the shares have been sold, the supply of shares becomes less and less and less throughout the day as the trades happen. So you sometimes see in the afternoon a very sharp spike, and you could see things running up another 100% from here. But the first day is basically it's all action's all in the first few minutes, and then it's over. And then what could likely happen tomorrow is we'll be limit down probably in both of the stocks.
Ooh.
That's the tragedy.
You said earlier that China is trying to test the IPO market by having these smaller companies do their IPOs. Why is there a need to test the market when obviously there'll be pent-up demand? We already have the Shanghai Composite Index surging, being one of the best performers in the world this year.
Well, I think, if nothing else, it's a great advert for it. Here you've started IPOs again. There has been a lot of interest in it, but rules have changed. They've reduced the bet size, as it were. Previously, any investor could invest for the entire IPO. Now the size basically is only they can invest for 1,000th of the IPO. So I think there was some concern that they simply wouldn't attract as much money as before. So I think you want to test the market. You've got fantastic coverage. You've got 2 IPOs that are up, 78%, was it 130%? And so we're talking about it. Everyone, again, is focused on China. And that sort of environment, that can only help if you're going to bring the billion-dollar IPOs on later. You don't want to start with $1 billion and then fail. That would be an absolute disaster for them.
What's the risk for China's IPO market?
Well, I don't think there's any risk. I think the trouble is it's just not developing. For the past, 10 dozen years or so, the CSRC has controlled the supply. They've not let the market dictate when things come to market. Ultimately, it should be investors deciding, okay, I want to buy this company. The pricing's clearly way off. The companies themselves don't particularly care. They're leaving half the money on the table. The investment bankers have no job to play because anybody can sell something that's going to double in the first day. So the difficulty is there's no problems. It will continue. There's lots of demand. If you price things cheaply and there's lots of interest, they're going to surge. But it's not a particularly sophisticated market and doesn't show signs that China's really developing as a stock market.
So you're saying that even in 5, 10 years down the road, you don't see the Chinese government taking a different approach to the IPO market?
Well, they haven't done it in the past sort of 15 years, as long as I've been watching it. These same sorts of measures, tweaking the IPO process, limiting IPOs when market's weak. The market goes weak, underwriters, perhaps we have a risk of underwriting, and so the CSRC steps in and stops the IPO market. That's rather foolish. I understand IPO markets go quiet, as you've seen in Hong Kong, but that's because there isn't the investor demand. You can't get the deal away, and so it comes away from the market. In China, though, it's still very administratively run. And I don't see that changing.
In terms of speculative, the speculative gambling culture in China, how will that affect the IPO market?
Well, that supports it. And that, as you see, that when you see things jumping 100% on day one, you're going to tell your friends. And if you were lucky enough to get, win the lottery ticket and get some of the shares, you're going to tell your friends, hey, I got some on the first day I sold it, I doubled my money. It's only going to attract more people in.
Fantastic. Fraser Wright, Managing Director of CLSA Asia Pac here in Singapore and co-author of the book Privatizing China. Thank you so much for your assessment this morning.